Hi, it's Paul Sankey. I ranked #1 independent energy research firm according to Institutional Investor magazine in 2023. My company, little two-person Sankey Research, going up against Goldman Sachs. I don't know where we ranked this year, to be honest, but we did. We were #1 last year. And every week I send you this video just to explain a couple of things that I've been observing in energy this past week. And one of the things I'm observing today is that here in Hyde Park, it's dead still and the sun is basically setting. And as you can see, the sun setting here it was beautiful last night, and I did try to do the video, but I ran out of juice. But the sun sets here, and obviously the point I'm making is that not very good for wind and solar at all. In fact, the UK is the windiest place in Europe, and the problem is that you have this syndrome where the weather tends to correlate over several days and over the whole region. So if there's no wind, which there isn't really now, it tends to last for several days, and it tends to be everywhere in the UK that's not windy. Furthermore, it tends to be everywhere in Northwest Europe that's not windy. And we've had a Dunkelflaute in Germany, which is the same syndrome, basically foggy, windless weather, which trashes their wind out and solar output. So, Germany has quite a bit more solar than the UK. Both, though, on a good day, will get up to 40 or 50% of electricity generation coming from wind and solar. And today is not a good day. And in the absence of a battery that can last 4 to 5 days, which, by the way, you're nowhere near developing at any kind of a cost, you have to turn to natural gas, which is a point that we've been making absolutely repeatedly to you. So I'm back in Hyde Park, and so, you know, that natural gas supply has to come from somewhere, which is called a fossil fuel. And another reminder, don't conflate fossil fuels by conflating coal with natural gas. They're two very different things from an emissions point of view. And to undertake a transition towards less emissions, we're essentially going to have to use natural gas as a supporting fuel, and nuclear is good, but very difficult. And one of the interesting things that came up in the past week, as I told you in the Dubai video, which was the previous one, was that I was going to Abu Dhabi, to the world's largest oil and gas conference, the ADIPEC conference, which had 180,000 attendees. It was absolutely rammed. It was so jammed with people that I really couldn't get a video together. It was just too crowded and too noisy, and it was sort of madness. And it was very interesting to me that they were talking about last year's COP28, where there was a lot of kind of complaints that there was 90,000 people attending for a UN climate change conference in the desert in a major oil and gas producing nation, which didn't seem very environmentally friendly. But double that many people go every year to the ADIPEC conference. And of course, there's much more media attention on the climate side because, you know, people want to fret about these things. But the reality of life is the oil and gas conference is simply much, much bigger. And as I say, as regards natural gas, if you want to turn the lights on in the UK at 4 p.m, see that building over there? The lights are on. You're going to need natural gas. All right, so the Abu Dhabi conference was interesting. It was absolutely huge, but it wasn't really my kind of event because it was all about selling people pipelines and selling people flanges and selling people manifolds. One of my favorite things was a fireproof hijab. But every kind of variation of oil products, including the majors. I mean, it was heavily, Chevron was sort of all over it. Exxon had a full Formula One car there on the exhibition floor. Oxy, Total, E&I, all very evident. But a huge amount of the conference was maritime. A huge amount of the maritime, by the way, is interesting. They're all switching to gas fuel. And one of the interesting statements that was made was the CEO of BP saying we underestimated how long global oil demand would keep rising. The same was said by the CEOs of major trading houses, Vitol and Gunvor. And as I heard all these guys saying, we're not hitting peak oil demand here, I was thinking to myself, you know what, that probably means we're hitting peak oil demand. And the key driver of why that would be the case is that, as you know from these videos, for many weeks now, really since mid-year, since things began to turn, we've been saying that Chinese oil demand might well peak here in the year 2024. And if Chinese oil demand peaks and goes negative, there actually really isn't enough global oil demand growth in the rest of the world to keep world oil demand from peaking. Because US is kind of flattish, Europe is kind of flattish, which is surprising. You would expect it to be down, but it's actually just about flattish. And where you have the growth, which would be India and the Middle East, isn't of the scale of what you could see in terms of less oil demand in China. Now, the Chinese issue is, it would be a very risky call if what we were seeing is economic weakness in China and therefore lower oil demand, which is definitely part of the story. Then that becomes a cyclical call. But there's also a major secular change in China, and that becomes a structural change, which is that they have massive penetration of EVs, electric vehicles. The best Uber I took in the Middle East was a really beautiful limo from Dubai to Abu Dhabi. And I said to the guys, you know, I often do if the car is sweet, what is this thing? It's like the back of a Maybach, man. And it was a BYD, it was a Chinese electric vehicle. And those are basically going to be subject, I think they are subject to tariffs in Europe. And if they're not subject to tariffs in the US, they will be likely under Trump. And that becomes one of the negative aspects of Trump, basically, that if you put tariffs in order to goose the US economy, you actually lose. And the reason you lose is because of a fundamental 1700s economic principle called comparative advantage, where trading, and I always say this with you guys about trading ideas, if you trade what I'm good at with what you're good at, we end up with more overall. And if you constrain trade, ultimately it's very damaging, and it's been proven economically many times over the years to be the case. So whilst tariffs in the short term are populist and will juice your economy, in the long term they'll actually damage it, because you'll become uncompetitive, because you're not subject to competitive pressures, and you build and develop things without competition, which is not healthy. So one of the negatives of the Trump administration coming in has been this tariffs concern, and that has worried the market. There's obviously been a euphoria with Trump, tax cuts, but particularly I think the market's going up on inflation, and you can see that in Bitcoin prices. Those again are sort of sugar highs as opposed to structurally strong economic developments. Additionally, you have certain amounts of nonsense. I mean, one of the funny things that's been amusing me is that you've got Elon Musk with the Department of Government Efficiency, which is called DOGE. DOGE is a ridiculously poor crypto coin which has no limit on its supply. So Bitcoin has an investment case because there's only ever going to be 21 million. And the cost of making them gets higher and higher. And we're at actually about the cost of making a Bitcoin right now, according to Cambridge University. They have a great website where you can see, based on 5 cents per kilowatt electricity, all the AI guys are pushing through 10 cents per kilowatt hour. So you've got this fascinating thing where Bitcoin will be in competition with AI for electricity. But right now at 5 cents, the cost of making Bitcoin is, you know, around $80,000 per Bitcoin, and that's kind of where the price went to in a hurry. So it's interesting to see whether it can keep pushing through, which would be on inflation concerns. Bitcoin, you know, has dubious transferability, so it's never going to replace Visa, although Trump is, to my pleasure, putting a lot of pressure on the credit card companies, which are outrageous. Here in the back of a cab, you have a little credit card reader, and they never use them. And the reason they don't is they charge a 4% fee. 4% for an electronic transaction is absolutely insane. So the guys carry their own credit card readers, so they only have to pay 2%, which is also, by the way, an insane number for an electronic transaction. But anyway, Bitcoin is in competition with AI and is just peaking out towards the cost of supply price, which Bitcoin's really interesting because it's the opposite of oil. So with oil, you have an unknown ultimate supply, because the higher the price goes, the more you can make. You can crush coal if the price is high enough. But with Bitcoin, you know there'll only ever be 21 million, and the price to make it will just structurally go up higher and higher as it gets as the halvings continue. But I don't want to get too sidetracked into Bitcoin at this point. The Office of Government Efficiency amused me because firstly it's named after a really bad unlimited supply crypto that was just, you know, essentially somewhat fraudulent. And secondly, it has two heads, which I thought was pretty amusing. So you start by having an Office of Government Efficiency with two people in charge. Not a good start. Additionally, if you think that, you know, Elon can do to the US government what he did to Twitter, where he's the 100% private owner of a company that he can do absolutely whatever he wants with, and he promptly fires 80% of the people that work there, which clearly was wildly overstaffed, like so many of these tech companies, There was no, in my mind, there was no deterioration in Twitter's performance as a result of Elon taking over at all. And everyone was just overemployed there, like all the tech companies. Why are the tech companies so overemployed? Well, they're huge monopolies. All of them are massive monopolies and are ripping you off, basically. And one of the ironies here again is that one thing that FTC was trying to achieve with Lina Khan was to actually work on trying to break up these monopolies, which we know all about in oil, because thanks to Rockefeller and his monopoly behavior in oil, we got the FTC and we made it illegal over 100 years ago to gouge gasoline prices. Unfortunately, the Democrats at this stage have failed to be able to break up the Google monopoly, the Microsoft monopoly, the Amazon monopoly, the Apple monopoly. They all get tolerated. It's kind of crazy. Okay, let me see. I don't want to go on too long here, and I'm not sure we got anywhere. Just very briefly on other environmental stuff. So we had the situation with Exxon supporting the Paris Agreement, and the quote that I had in the Wall Street Journal was basically saying, these companies don't want regulations to change back again, and they do want to try and lower emissions because it is in everyone's interest. And what I was saying is equally, drill baby drill is kind of garbage, because these companies have no interest in drilling, even if the government wants them to. And whoever's in charge in Washington essentially doesn't make any difference really to how much oil and gas the US produces. It's all a free market question of price and supply and ability to supply. So drill baby drill, it will open up some federal lands likely, but ultimately it's not going to make any difference because the oil companies aren't dumb enough to go out drilling at a time when there's 4 million barrels, 5 million barrels a day of global spare capacity in oil, which is why we're bearish oil. We're still buying the AI theme. That's going to keep coming. Latest tech reports from the Monopoly 7, as I call them, all confirmed significant increases in capex in AI. That's going to leave a bid under the gas players in the US, and tonight we have the CEO of Tourmaline, Canada's biggest gas producer, on our client call. So the themes remain very much the same, even with all the drama around Trump, which is significant. It is socially significant without any doubt, but it's probably not. Things are never as bad as you fear or as good as you hope, and I think that's pretty much how I'm seeing all these appointments. Although in some cases you do have, for example, the case of Lee Zeldin, the New York congressman who's now going to be in charge of the EPA. You are clearly going to have significant deregulation. And that actually is quite good for example, the gas companies in terms of opening up the ability to build pipelines, and the whole syndrome of environmentalism, which is not in my backyard, NIMBY or banana, build absolutely nothing, absolutely nowhere at all, are undermined basically if regulations are eased a bit in order to keep the economy going through better supply. I'll give you an example of where the Biden administration got it completely wrong on day one. They canned the Keystone Pipeline, and if you want the most efficient, lowest cost and safest way of transporting the oil and gas that we all use, you need pipelines. And virtue signaling to cancel a pipeline really illustrated that there was not a good understanding of how global energy markets work, which is why I try to do these informative, should we call them, what I'm trying to say is why I try to make these videos informative, because my friend Alex said I should always sign off, you gotta have energy. Stay tuned, we'll be back next week.